Infosys. Lots of action from a weak set of earnings to a very cautious tone ahead. But you know what stands out for me, Ron, really is our CSI telling us that there could be more board changes. So perhaps there are extensive conversations happening. And guys, that is the big story today. Infosys has reported its fourth quarter numbers. So let's first start with the IT giant's earnings. Then for this quarter, the company has posted a weak set of numbers. So the last quarter of FY17 is probably one IT giant Infosys clearly wants to forget. And quickly at that, revenues came in below expectations with dollar revenue growth at less than 1%. Rupee revenues contracted nearly 1%, and revenue growth in constant currency terms came in absolutely flat on a sequential basis. Profits contracted about 2.8% over the last quarter to about 3,600 crore rupees, but that was as expected. So no disappointment on the profit front. But what did disappoint, however, was the growth guidance. Infosys expects revenues to grow between 6.5 and 8.5% in FY18, when the street was actually expecting it to stick to a 7 to 9% growth guidance. That was a conservative street expectation. But what this quarter will really be remembered for is the sudden eruption of discord between the management and its founders over matters of corporate governance, specifically executive compensation and capital allocation. Infosys has, on its part, tried to elevate some of these concerns. Here's a comprehensive CNBC TV 18 report.
Infosys has had a trying fourth quarter, and not just because it has been in news the ongoing war of words between the promoters and the current management on a slew of governance-related issues, a volatile rupee, changing macro environment, and pressure in areas like high-tech retail and consulting, just the three of many such factors that has, in fact, forced Infosys to admit that fourth quarter of FY17 has been a challenge, operationally speaking.
Weakness is apparent not only in key growth parameters like revenues and net profits. Margins have contracted to 24.7% from 25% in the previous quarter, and for FY18, the company says it expects margins in the 23 to 25% range instead of its earlier estimate of 24 to 26%. Volume growth has also been weak in the quarter gone by, as have realizations. All this has Infosys forecasting a 6.5 to 8.5% growth in revenues in FY18, lower than the widely expected 7 to 9% band. However, CEO Vishal Sikka says there is scope to inch this guidance range higher once there is better visibility.
As our visibility improves, obviously, I expect that we'll be able to do.
There is scope.
Yeah, there is scope for doing better, and in particular, as the software as a service offerings and the new offerings continue to kick in later on, then I expect that we'll be able to beat the Q3 and Q4 traditional depression that we have typically.
The seasonal weakness that you see.
The seasonal weakness, that we'll be able to overcome that better in the coming year and so forth. But based on everything that we see right now, it is 6.5 to 8.5.
So is it fair enough to say that by the second half of the year, you'll get better visibility?
Of course, yeah. Okay. Yeah. With every quarter, we should get better visibility.
Some of this uptick, Infosys hopes, will come from its efforts to maintain margins and rationalize costs. But there are quite a few challenges ahead.
Retail is one area where we are seeing challenges. There is a lot of softness there. There is a lot of disruptions happening. High-tech is not doing well. Again, it's a structural issue because high-tech companies are moving to a cloud-based thing, which necessarily means lower margins, reduced margins for them, and so there is a lot of pressure on cost takeout and so on.
However, one area Infosys has not disappointed in is its capital allocation strategy. The long-awaited clarity on this strategy has finally come through, with Infosys saying that the earlier target allocating 50% of its profits as returns to shareholders has been revised to 70% of free cash flow. So FY18 will see Infosys shareholders getting dividends or the opportunity to participate in a share buyback, or both.
The timeline that the board has specified is clearly fiscal 18, and the quantum is up to 2 billion, which is roughly up to 34% of the balance sheet cash.
Okay. Operationally, however, its own aspirational target of $20 billion in revenues with margins of 30% and $90,000 in revenues per employee by the year 2020 may now be a tough ask.
Obviously, it is an exceedingly difficult target to achieve, and I used to joke that it is, what good is it if it is not a difficult one, and now it's even gets steeper as the time goes by.
But will you revise this target then?
It's not a target. It is a
Aspiration.
Yeah.
Okay.
Okay. Let's say sometime after 2020. But I'm sticking to 20 billion and 30% and 80,000 because that's the right way to think about our future.
Numbers and earnings aside, the board sprung a surprise on investors and industry watchers by appointing independent director Ravi Venkatesan, who has been on the board since 2011, to the post of co-chairman. This is a telling development considering the management and the board have found themselves at loggerheads with the company's founders over issues of corporate governance. So we could not help but ask,
I know it's been a distracting, difficult few months for you. What lies ahead? Mr. Venkatesan has come in on the board as co-chairman. What will his role be in terms of defining company policy, CSR policies, the role forward? And are there any more changes that we can expect in the board functioning?
I have no idea, whether to expect more changes or not. The board job is governance. Earlier somebody asked about the two chairs and
how it will work.
I was thinking about, Vincent van Gogh made this painting, which is called Two Chairs. But actually it is a painting of one chair, which was, it just somehow came to my mind. Anyway, joking aside, Ravi and the entire board, we have had a tremendous working relationship. The board's job is governance and our job is to develop the strategy, to execute the strategy.
But the reality is that the economic environment for Infosys is far from picture perfect. And given it will have to navigate a slew of geopolitical uncertainties, currency volatility, increased visa costs, and tightening client budgets, the road ahead is going to be riddled with potholes, speed breakers, and maybe a few twists and turns. With Kritika Saxena and Rukmini Rao in Bengaluru, in Mumbai, Arundhati Ramanan.